The election's over and everyone is jumping. Either you're jumping for joy or you're ready to jump off a cliff. Guys, stick around. Let's talk about the impacts of the election on infinite banking.
Enjoy the episode.
If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad, Poor Dad, along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. And man, today we're going to get a lot of eyes on this viewing because we're going to be talking about the election and the impact that it has on infinite banking. So we're glad you guys are joining us. Anthony, initial thoughts as we kind of discuss this topic.
I've been the one jumping for joy is all I'm going to say. For many reasons, but particularly how this is going to impact or not impact infinite banking and what we're doing. So I am looking forward to sharing really a little data, and also we're going to have to be sharing a lot of our opinions here of kind of what we think. And I love sharing my opinions.
Exactly. I too am very optimistic, and I kind of, as I was prepping for this, I kind of felt like Johnny Carson. This is before your time. You're a young man. But I remember Johnny Carson, he hold up the envelope and he's wearing the funny hat. And I think it was Karnak. And he would give the answer and then you'd open it up. Everybody laugh. But anyway, so we're all going to laugh at you as you share your opinion today, Anthony. So, hey, man, you want to get us started? What are some thoughts, man? Get us going. What's the impact IBC is going to have as a result of this election?
Well, I think we're broke this up into two pieces. One, how this is going to affect IBC indirectly, but also how it's going to affect you indirectly. That we're going to talk about it. And where most people get a little nervous on the impact of a change in government. And what do you think people are most worried about, Cameron, of the change to infinite banking?
Taxation.
Yeah. Right. And what I want to, before we go into that, I want to instill, why are we doing infinite banking? Cameron, are we doing it as a tax strategy? Is that the main reason?
No, I'm doing it to make money.
Right. Perfect. So, and exactly. So the tax advantages is one of the many advantages of infinite banking. And really the main reason why we're doing it, Cameron, as Cameron mentioned, is to make more money. And we do that by never breaking the compound interest curve, meaning that your policy is continuing to grow even while we're using it. And part of our education process, and particularly my favorite part, because I know, and maybe not as much yours because I'm more of an analytical, but where we do the math, right? We got to store our capital somewhere. So do we store it in the bank and buy an asset, or do you store it in a policy and buy that same asset? And my favorite part is when we do the math and compare both options. And I would say, to be honest, full disclosure, kind of at the end, when we're kind of comparing the different options, we talk about why infinite banking is better, right? And one thing I will do, I intentionally leave the tax bracket on there, right? And I do that for a few reasons. Full disclosure, for one, I think it just makes the point even more impactful. But wait, there's more. Okay, so it's kind of like a sales technique, to be honest, right? But there's two other reasons. For one, we want to show the impact that taxes have on building your wealth. And third, IBC is better even with the tax bracket on there.
That is true.
So even if it is taxable, this is still better than paying cash. So whether they change the tax code or not should not impact how you're doing infinite banking. If they were, we often kind of use the analogy of your policy is your rewards credit card for investing. So if they were to tax it, this would kind of be the equivalent if you had a rewards credit card and you needed 50,000 points to fly round trip to Europe, but now it's 75. Does that mean you're going to just cut up the credit card and start using cash? All it just means the benefit is a little bit smaller, but there still is a benefit there. So we want to make sure, just to hit that home, infinite banking, the main reason is that uninterrupted compound interest.
Yeah.
So let's not worry so much about taxes. But believe me, I don't want to pay any more taxes than I need to. So I really want that. I want this to be tax free. But now, kind of that was a long-winded setup for, I don't see this happening or being any tax impact on infinite banking. And let me say two things. For one, let me give a little disclaimer. This is entertainment purposes only, right? Just a CYA. This is our opinion on predictions of what we think is going to happen. But also, how about a CTA, right? If you want to know more about how infinite banking works, the best thing to do is get on a discovery call with us, and you talk to Cameron or I about 15, 30 minutes and kind of answer some questions. Link for that will be in the bio. But
well said. Right.
Thanks. Yeah. But the bottom line, I don't see taxes changing in regards to life insurance. What about you, Cameron?
I agree. You see that kind of that balloon or the signal of, hey, we're going to be taxing the buildup of cash value life insurance. They've talked about that as long as I've been in this industry, 15 plus years. And so it's never actually happened. They always kind of put these signals up that they want to discuss it. But now I even see it being less of a possibility moving forward for a couple of reasons that we're going to talk about later.
And, I think one of the biggest reasons why I feel confident that they won't make a change in life insurance is because who is the biggest owners of life insurance?
The lobbyist banks.
Right. We talk about banks. Bank of America has $24 billion in cash value life insurance. Yeah. Wells Fargo has over 18 billion. Do you think they might be having their lobbyists make sure that this isn't taxable? Now, it's not even taking into account all of the corporations that are buying life insurance. And you know who else is buying a ton of life insurance, Cam?
Politicians.
We were, and it's public knowledge, but you can get the financial disclosure for our current president, Joe Biden. You want to know what? He's got a few policies with whole life policies with the mutual life insurance company. And you know what also he has on there?
I don't know.
He has loans against it.
Yeah.
Right. So again, with these politicians, we have the lobbyists wanting to keep this tax free, and they want to as well.
Yeah.
So I know this does come up every now and then. Part of it, I think, is a scare tactic.
I totally agree.
But yeah. I don't see taxes being an impact.
I would say a little more than a scare tactic, because historically, you look at the government, they don't have any money, right? So they are looking for pools of money to tap into. And so that is an absolute valid pool. But so far, historically, we've been able to kind of keep them at bay. So, yeah.
Now, but then there's a longer impact of something of what this election is going to be. And I think it's going to be even really more important than the taxes on the life insurance. And that is there's two tax laws that are set to expire at the end of 2025. Now, the first one, in the Inflation Reduction Act, there was subsidies for the affordable healthcare premiums. That is set to expire. Now, that could raise premiums up by as much as 50%. Now, this is one thing I find interesting. This is part of the bill called the Inflation Reduction Act. Now, Cameron, if the government spends money on subsidies or helping us pay our bills, does that lower inflation?
No, that kicks it up.
It kicks it up?
Absolutely.
It doesn't reduce inflation?
Not at all.
Well, how about this, Cameron?
Not at all.
What if we don't even have the money to give these subsidies, so we borrow additional money to pay for these subsidies? Now, does that lower inflation?
Not at all. It's like my kids, whether they have money or don't have money, they spend regardless.
Exactly. Yeah. So to me, this is when they put these terms on here that really are more like the exact opposite.
Yeah.
It just gets it gets a little frustrating. Now, if they were to keep those subsidies going for the next 10 years, that's going to add range between 300 and 400 billion to additional debt over the next 10 years. Okay. Now, also, there is the Tax Cut and Jobs Act 2017. Now, that is set to expire in 2025 as well. And there is a lot going on in that bill. For one, it had increased the standard deduction. It had lowered marginal tax rate. It had capped the sales tax and state income tax deduction, increased the child care tax credit, increased the estate tax exemption, also created a new deduction for business owners of 20% of the net income. And this also lowered the corporate tax rate down to 21%. Except for the corporate tax rate, all the other ones are set to expire. Now, with the Republicans controlling the House and the Senate, and the House, I would expect that these bills to be continued in some fashion.
Yeah.
Now, also a note, because this isn't a new law, it's going to be one option is to extend it. They don't need the 60 votes in the Senate, so they don't need a super majority to get this through. So who knows what they're going to stick on here? But I mean, also Trump had mentioned no tax on overtime.
Yeah.
No tax on tips. Which that all sounds great, but the problem is we're still spending more money than we're taking, right? So I don't know how we're going to afford these or pay for these tax cuts. I got a couple different estimates on what if we were to extend these tax cuts for another 10 years, but it was really in between 4 and 4.6 billion. Okay, so if we were to extend that and the subsidies, we're adding about another 5 billion over the next 10 years. Now, one thing I want to keep in mind, like $1 trillion it's really hard to grasp.
Yeah.
But, maybe this will help. Let's say you had $1 million in a bucket. You would need 1 million buckets. Like you need 1 million to equal 1 trillion. And we're talking about 5 trillion. And you know what we're not talking about is we already have a budget deficit. When they present the annual budget, they're already spending more money than it's coming in. And now we're going to add to that. Like imagine if you were running your household and you took in 100 grand, be like, hey, we're going to spend 110. And then next year, you do the same thing and you spend another over 110. We continue to get this deficit. And so what I'm concerned about, not as much today, but really the impact of this is going to have in the future. For one, with this subsidy, what if they discontinue it? Are people going to be able to pay their premiums? Or maybe they find a way to pay the premiums by taking money from somewhere else. So I think that will impact the economy in some way, as well as if we continue to add money to the deficit. I mean, I really don't, it's got to stop at some point, right? And how does the government raise money? Well, for one, they print it. Okay, which just creates inflation. They raise taxes or they cut spending. And you know what I think is interesting? Everybody talks about the taxes, or everybody needs to pay their fair share. Certain classes, or you're not paying enough. In fact, doing some of this research, I found the state of Washington wants to add an additional 2% to the capital gains tax to help pay for the homeless. we could say if you got a capital gain, you got more money than some of the other people. But you know what they're doing is they're just having us talk about what you need to pay more, or this person needs to pay more. And really, I feel like they're butting our citizens against each other. You know what nobody's talking about is cutting expenses. But that's kind of changing.
I was gonna say, I know a couple.
You want
guys.
to add a
I
little bit to
know a
that?
couple guys that are talking about cutting spending.
You want to talk about that?
Absolutely, and that's one of the things that I had pointed out. And to be totally honest with you, up until last week, I had very little hope that our government was ever going to rein in spending. To be totally honest with you,
Yeah.
As you look at the track record, and what I've gotten written down here is overspending is a bipartisan ill. Both
Yeah.
sides are guilty of it. Both just write checks that they can't cash, and it has not slowed down one bit. Enter the Department of Government Efficiency. And so, to be honest with you guys, man, I'm really excited, right? Their stated goal is they're hoping to slash $2 trillion off of the budget of the government spending. Right now, they spend about $6 trillion a year. They're hoping to take a third off of it. And to me, right, you were talking about just the factor of million versus $1 trillion. That's just a crazy amount of money. But man, you know what? If they get halfway there, that's a huge win for us American citizens in spending and just trying to rein some of this in. And so I'm excited. Another goal that they stated was reducing federal agencies from 400 down to 99, less than 100. Again, we may not see eye to eye on this, but that's something that I get excited about.
Yeah. So I tell you, we often hear, oh, well, what they normally say is we're going to cut the deficit 10 years from now.
Yeah.
Like everybody's kicking the can down the road.
Mm-hmm.
And finally, we have some people seriously talking about attacking it now. And they're getting non-government employees to really help solve the problem. So I'm very hopeful, but I'm also being realistic. They're going to get a ton of pushback. I'm already seeing it. Like, who wouldn't want to make this large company or large government more efficient?
Yeah.
So unfortunately, with politics, one side always wants to make the other side look bad.
Yeah.
And so I think there might be some government headbanging here. So, but that does give me hope.
That does. Absolutely.
But the point I want to make in regards to whatever happens, even if he keeps taxes, we're going to add this deficit, even just keeping taxes the same. So that's not counting if we were to lower them. So I would tell you, to me, this sounds great.
Yeah.
I do have concern. I cannot imagine taxes going lower.
Mm-hmm.
So that's another reason why the advantages of infinite banking, right? Because we have our wealth, particularly if you're truly doing it, most of your wealth is going to be running through there. So most of your wealth is protected from the IRS and also protected from creditors. But also, I do have some concern about inflation.
Mm-hmm.
Now, I know we're going to try to keep it down now, and hopefully we can, but really, in my view, without getting too much into it, inflation is caused by government overspending. There's just more and more money is being pumped in, and they're printing money. That's what needs to be stopped. And if we don't stop it, we're going to have inflation. So that's why I want to invest or put my money in places that will be positively impacted with inflation. Now, part of that's going to be real assets, like a rental property or land. You get those real assets, they're going to go up with inflation. And so is your rental income. As inflation goes up, you're able to charge more. Also, your policy, right? Higher interest creates higher interest rates, which creates higher dividends. So thus, by having your money in that policy, as inflation increases, so will the dividends, and so will your policy. So even though some of these laws might negatively impact infinite banking, there's even more reason to be involved of infinite banking, to get those real assets, to combat inflation. And at some point, if they were to make a change in life insurance, which they've made two major changes, both times existing policies were grandfathered in.
Great point. Yeah.
So now is more of the crucial time, I think, to incorporate infinite banking.
Yeah, well said. Fasto, I got a lot of that same stuff written down here. We talked about tax cuts.
Because you're taking notes from what I said.
We talked about government spending. But one point that kind of ties into what you're talking about there at the end was really interest rates. And one of the topics that I wrote down was the Federal Reserve kind of dictates interest rates, whether they're going up, whether they're going down. And what was interesting is Trump is going into office, and he was probably the most outspoken president in history in regards to what the Federal Reserve should be doing. And I went back and I looked. Jerome Powell, was actually appointed by Donald Trump and then reappointed by Biden. His term is up in 2026, and so it'll be interesting to see kind of how Donald Trump handles that and who he appoints or nominates for that seat. I would expect him, based upon the comments he's made in the past, to appoint somebody that is more interested in lowering interest rates. And so that's kind of what I would see for us as well, right? So you talk about a direct impact. Lower interest rates in the future allows us to purchase or borrow money at a cheaper rate. So kind of what you were talking about is, hey, could be a great opportunity to go and acquire assets at lower interest rates moving forward. So be ready for that.
Well done, Cameron.
Yeah, absolutely. What else? Yeah. Last thing I wrote down was if we've learned anything over the last 4 years is there is a new course of action called lawfare. I don't know if you've come across this or heard about this. I'm sure you have, but this is the idea of an outside agency coming in and maybe taking possession of your stuff, no questions asked. And so to me, looking back over the last 4 years, I feel like it's even more important to stress to clients, hey, we need to protect what we've got. And so that's talking about setting up LLCs, setting up trust, and working with an estate planning attorney, business planning attorney to make sure that all of your stuff is protected and safe.
You know, I wasn't going to add this, Cameron, but you brought up a good point here, so I will. One of the things that's also set to expire is the exemption for the estate tax. And in essence, what that is, anything over that exemption is taxed at 50%. Now, what was interesting, in 2002, the exemption was $1 million. And if you're married, that's $2 million. So what that means, if you had a net worth of $3 million, $2 million is exempt. $1 million is subject to that tax at 50%. So you're paying $500,000 to the government on really assets you already paid tax on. So that did increase with the Tax and Jobs Cut Act. It was actually increased before that to 5.5 million, but this tax cut increased it to 11.2. Now it's set to go back to the 5.5 million. Now, one thing I want to realize, a piece that's often misunderstood, is your death benefit is income tax free. However, it is subject to estate tax. So if you have a net worth of $2 million, and really that's also including the value of your home and maybe a business. So it may not feel like you're worth $2 million, but in the eyes of the government, you are. Then you have a death benefit of a few $1 million. It's possible for you to get over that amount. However, there's a lot of ways to avoid that. So if you think you're close to that 5 million, pay close attention to what's going on if these taxes and exemptions are extended, but there's many ways that to avoid that. And to be honest, I think there's no way Trump is going to lower the estate tax. So I think that is going to go up, but I just wanted to clarify that your death benefit is included in the value of your estate.
Great point. Anything else, Faso?
Nope.
All right. Let's wrap this thing
I
up.
wish I had like a zinger for you, but honestly, I
yeah.
was so focused on creating good content and data, I didn't come up with one, but next time. Okay.
All right, guys. Hey, hope you enjoyed this, right? We kind of made some projections and shared our opinions on what is to be expected here moving forward. We hope you guys found some value in this episode.
Go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.